Good morning. It is the week of August 28th, 2022. Today is Monday, August 29th, and let's make it short and sweet this morning. Got a lot to cover, but in a very short period of time. First off, we had a massive trend day down on Friday, as you can see. This is an engulfing candle, which covered 1, 2, 3, 4. Let's just count this leg here. It is arguable that we have a head and shoulders pattern here as well. Against this gap resistance. That means that we might have a measured move down, right? So the measured move would be from, let's see here, got to pull up my little tool window, second. Okay, let's see, I'm just going, actually I think that's off a little bit, those lines. So let's go from here to, it looks like that hits it, and then where we broke out, copy and move this from here to here. So we're possibly looking at a move down to 39.50. Maybe take out these. Here, let me just place that in there. Again, this is rough. Maybe take out these lows. Obviously, this doesn't mean this is happening today. May not happen at all. We do have a 50 average moving up. This offers oftentimes a bit of support. Dynamic support. It as I mentioned on Friday, and I do want to talk about mentioning on Friday, this is a regular trading hour session. This just covers 9:30 Eastern until 4:15 Eastern. Make your adjustments for your time zone. So I had talked about on Friday, I'm going to put the clip in the comments or just maybe description, whichever. But you can look for the clip. There's about 30 seconds. I talk about what we may be looking at on Monday, whether we get continuation, a gap down, and whatnot. And it kind of played out that way. I don't have any predictive ability. All I have is market understanding, experience, which inform odds-based imagination. Okay, it's kind of like this. It's sort of if the Grateful Dead play a Rip and Jack Straw, odds are pretty good the next number's going to be a bit slower tempo, maybe Black Muddy River or something else, a little bit slower. So Standing on the Moon, something like that. But or Broke Down Palace. But anyway, not always. But you know what? If it's your first show, you have no way of knowing that. If it's your 19th show, you might be starting to get a feel. But if it's your 99th show, yeah, you pretty well know you can take a little breather and have a seat. At any rate, so let's move on. I'll place that clip down there. So I went back and checked it this morning because I thought I talked about that, and I did. Let me just pull up the profile here. This is in 1, so pretty much rotational in the overnight. We've got, let's see, we're at 29 now. I don't think it's a 20-point gap down, but it's well over 10. So there's room for taking profits. And this is in 1 point. Okay, so there's a lot of room here. If we do close this gap or attempt to. Okay, so let's Friday was one-time framing down most of the entire day. You could consider this a late spike down in a way. Basically, we've had continuation. Actually, you might even just consider the low, and because you can consider the gap part like single prints. Okay, so the auction has continued, but now we've got a D shape. But if you can think about it in terms of all these single prints down, all these TPOs down, it's a B, and a B shape is significant in the sense that it's often formed after long liquidation and the market pauses and then might resume back in the other direction. So again, I don't know what's going to happen. We're kind of light on the news today. Shoot, I closed my oh wait, I got it right here. I print out my worksheet here, and oftentimes I don't refer back to it. So at 10:30, you've got the Dallas Fed Manufacturing Business Index, a couple bill auctions at 11:30, and at 2:15 we've got a Fed chair speaking. So don't know how significant that'll be because the Jackson Hole Symposium, there may be some follow-up comments to that may be significant. I don't recall. I didn't write down which one was speaking. It might be Brainerd. I don't think it's Powell again. Anyway, you can look into that. I'm trying to make this real fast. So we've got a sort of rotational in the overnight, right? It is one-time framing up now. Are we going to continue this into the open? in the next hour? I don't know, but if we take out this swing high in the overnight before that, I'd say the odds are pretty good we're going to close this gap. So let's just bring it into the strategies now. One thing before I go any further, I'm talking to myself, okay? Today's Monday. It was a heck of a day on Friday. A lot of opportunities have the highest risk when it's moving fast. A lot of opportunities when the highest volume and all this when it's early. But it's good to get on base. So patience, waiting for something that just jumps out at you is never a bad idea on a Monday after a weekend of being out of tune. Just like a musician, the things change through the weekend. So just like if a musician sets down their instrument, the temperature may change, things may change, the sunlight hitting the strings or whatnot. If they've had any kind of significant break, it's good to check your tuning. So let's check our tuning. All right, so here, it's quite bright. Let me just minimize this a bit. So we've got 5 strategies, or excuse me, not 5. Wait a minute, 6. Whoops, this should say 5. I don't know why I typed 6 there. So we got 6 stories that may play out today. Okay, first of all, we're gapping down over 10 points. Gap down, gap rules, which means if you aren't familiar, basically go with the gap. But you got to look out for the conditions. You want a high confidence open. You want it to build value. You want strongly negative market internals. You want it to really seem directional. Okay, so there's a couple ways to get into that. You could do an opening range. Maybe the best case would be if there's going to be continuation of the downside, let it take out the overnight low. Let it take out maybe these lows down here. Let me move this. These lows down here around 40.15. Let it get through these areas. We've got a buying tail down here. It might be a good low. We've got attenuation in the volume. Okay, I'm getting too long here. Let's move on. Close the gap from greater than 10-point gap down. Well, that's story number 2. So this means that we've got enough room to take profit on a close of a gap. Okay, so it might be worth taking along into the close of the gap. And why is it better to do it when it's greater than 10 points? Because if it's only like a 1 point, you might get rejection right at that low. You might get slammed. It might close the gap in a point or two, but unless you're going to take your profits, you just might get crushed again. Okay, so we're looking for the strategy is to reject lower prices and trade towards yesterday's low of day. Pretty self-explanatory. Excuse me. I wrote the entry as a prairie dog, meaning I'd want to see it maybe try the attempt to take out the low and fail and come back in and then move towards the gap. I also probably didn't get into enough of elaborate. There's other ways to do it. You could trade against the overnight high. Again, you've got your own strategies, but let's say we take out the overnight high, then you might look for what I call a floor trader. So it gets above it, comes back down and finds support on that area or level, and then goes forward. So we're looking for, I don't think I can really draw on this, a move up out of the overnight high and a move back down, and then up towards the gap. So that's one way. Another way would be just, again, it is an opening range trade. It just blasts through the high of the opening range and moves towards the gap. So, all right, the next one would be once that gap is closed, next story might be, and again, we can get a blend just like we did on Friday and oftentimes do, re-enter the prior day's range. And the strategy is to get long inside yesterday's range. So we want it to be in there firmly, right? We want to know that that we're rejecting lower prices and that we're building value back inside yesterday's range. Okay, there's a lot of room to retrace some of that, even if we're going lower. We could see a retracement. So the conditions are: first of all, we got to enter prior day's range, build value, and the market internals will support direction, meaning they're either rolling off from not much negativity, or they're rolling up. Or they're building solidly. Early on, it would be building solidly, or by the time we get in there, they're very positive. So like if we trade down here for the first hour or two, and then we get inside yesterday's range, by then they're probably going to be pretty solidly positive. So the next story, and then I'll wrap it up here, close the gap, but reject the prior low of day and fail to remain in the prior day's range. So, again, saying we don't have continuation, we don't have a gap and go, as story number 1 outlines. We close the gap, but we either don't close it totally, or we close it and get inside of it. Maybe we come back up to this volume point of control down here, the settlements down here, and we get rejected back out of it. Maybe it spends a bit of time in here rotating back and forth, and maybe from 66 down to 54, you know, maybe get a little P shape for an hour or two, and then it comes back out of it. That could happen. You know, we roll back to the downside. So what we're looking for, just a minute, I lose my cursor when it goes over this, to sell the low of the day outright, or the value area low. I guess you could even say the VPOC, but we're looking for, and this is key, rejection of prior day's range is clear. Okay, I want to be sure of that because we've already closed the gap, so that might get a lot of short covering. So you got to be careful shorting against short covering. Market internals don't support. The condition is market internals don't support conditional continuation higher. They're likely going to be mixed or turn negative with strong selling at inflection points. So look for that. So if you get a real push at the lows or real push at the value low or up here at settle, you see selling coming in where they're stabbing down a lot. You know, just be looking for that. They might be just building positions to take it lower. Okay, they meaning the in the royal sense of the word, the I don't know who, not us, not me. I'm not building positions. I take a position. That's pretty much it. Okay. The last story number 5. Again, this was a typo. Take out the overnight low, but fail to continue. We've already got that covered up here in story 1. If we take out the overnight low and continue, okay. But because the rest of these are about either closing the gap and continuing higher, closing the gap, getting rejected, or starting to continue but failing to continue. So we need to be able to the strategy is recognizing the down move is over for now and prepare to balance or close the gap. We may just stay in a good part of the day till the Fed chair speaks. We might just stay in the overnight range with a little bit of taking out the high, taking out the low, all that kind of nonsense. Nothing really happening. So that's possible. There's a bunch of news this week and later days, so sometimes the market just kind of might rest, right? Market internals are not trend negative. They might be negative, but not like trending negative. If you don't know what that means, please study market internals a little bit more. There's plenty of videos on YouTube. Or I'm not an expert in it. I just know what I like and kind of have a feel for how to read it. So they're not trend negative, or maybe they're slightly negative, but they're rolling up. So let's say they were negative, but they are starting to come off. You know, moving averages on the tick are above 0 now. The breadth is negative, but it's slowly kind of coming up. You got to think of it, if you're familiar with cumulative delta, like when that's changing. It may still be negative, but buying is coming in, or people are getting out of shorts and things like that. Okay, so another thing that would be ideal is that we spend some time down here, and at some point after we've taken out the overnight low, we've got what looks like a good low and a buying tail. Okay, I didn't write good low in here, but we have a buying tail. And one of the things to look for to identify either a good low or a buying tail would be the attenuation. Let's look at the overnight low. So in X period, notice how it's in this lower volume anyway, but we go from the thousands to down to just double digits, triple digits. So that's something to consider. I don't like this low too much because it's right on a pivot point. You can barely read that. I think it says S1 or 2. Just a moment. I made my numbers so small because it's not so important to me that I read them. That is the S1. I had to get way in on the screen on that. I probably should brighten up those colors. Okay, so there you go. All right, make a great day, and we'll see you later.